The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil CHapman.
Hi folks, Basil CHapman, Tiger Technicians Hour. This is the Friday edition, Friday, September the 20th. Gosh, time flies. Ah. All right, September the 20th. I'm here at 11 o'clock till noon. Every day, every market day, that is. Hey, great 2 hours for Steve Rhodes. And, of course, don't forget, Steve's a week from today. Right at this particular time, Steve will be right in the midst of his Master Trader series. Please check it out, front page of TFN. You know that he's got absolutely fabulous ways of looking at the market, very inspirational and perspirational in that he puts in a lot of work and looking at all these different techniques, and he likes to use many techniques, some of which he'll find and perceive to be valid and robust, and he puts them together with his own analysis. So please check it out. Education is what we're about here at TFNN. It's why we do these shows. Every one of the shows we try our very best to create some kind of educational tool. Let's just run the numbers here. And don't forget, straight off this educational health. You've got Nico and Paige, just a fabulous show. Shows right through the day that are very informative with a great deal of knowledge and years, it's decades in many cases of experience that goes into trying to help you save and to make money. Now, a couple of things happened this morning that I consider to be really important. We've had some fabulous, fabulous trades on. But I tried today to get in two cases, add-ons to what I thought was working very well. I had prices lower, much lower than the close yesterday, and yet they were still taken out for a very small 20 cents, 30 cents, like less than a 1% or about a 1% loss as a trading position that I was hoping would, on the upside, make a few percent. But so it was worth the risk, 1 to 2 or 1 to 3. However, that wasn't really the issue. The issue is that these particular heavy-duty cyclicals got smacked, and are actually still quite a bit lower. And I'm saying to myself, that is a sign I did not expect today. I expected it next week. It's a tip-off that a lot of things that I'm looking at, and right now you're looking at the E-minis, in leg D. Remember, in this case, I always show at the beginning of the show the E-mini daily with the Chapman wave, all the notations and the Chapman wave techniques, left side, right side, price, time match. Look at that little red to the green, the cup formation, the low of 1680. What do I look for? I look for the lowest, most identifiable low bar. Merely count each successively higher peak. It has to be a peak. In other words, it's got to have a lower high the following session, a lower high bar. The whole bar has to be lower. That is, it makes a top. And then you can count it as a peak, and it gets uppercase letters on the upside, lowercase on the downside. On the downside, we had trough D. Now we've got peak D, same as we had a peak D with a silent doji back on the 2nd of August. That whole setup there, 1698.50, gave a fabulous sell signal. Now what we're looking at is, I'm not getting a sell signal here. Other things are happening that are very positive, and there is a doji candle, but I am lagging, not I, but the Dow is lagging, and it has only made peak B, and it should still go to a C and D. I'm going to explain that in a moment, and there's the Chapman wave squash. The let me just double check. This could be I've got this as a GC in the mostly I've got it as a C actually, but I'm going to put GC in the 120-minute Dow chart. Now this is very important as far as I'm concerned. Let me move that away. The weekly chart has had a very strong move to the upside, making a W formation. That W formation at tops is very different to a W formation at the bottom. And there are different implications in my work. It means that you're going to be getting to some very strong resistance quite soon. I mean, that's statement number one. Number two is, if you're looking at the volatility index, I'm going to show all of these in a moment. The volatility index is down 57 cents at 12.59. That is buying pressure, but it is options expiration day, and options at the open on a Friday, the third Friday of the month. That is where you can get an aberration. I've learned, it took me 2 times to figure out what was going on with that aberration. This time it wasn't an aberration with a with the volatility index, in the sense that there wasn't a spike up, there was a spike down, even though the market opened up quite negative. So that's going to be important. But even more important is that in the way I use the Chapman wave trend gauge, there was an aberration there. And often we've seen that if there's a lot of buying activity at the opening, it can really distort on options expiration. They actually, even if there isn't much buying, but there isn't any selling. In other words, the futures open more or less unchanged rather than a little bit down. Very often the VIX can go down to the 0.9 or 0.10 level. That's really an aberration. I learned how to deal with that. Now, I'm going to run the numbers, and then there's something I want you to continue in my talk about different techniques that I love to teach and I love to work on, the simplicity of some of these techniques. But the human factor comes in, and how you trade it becomes very important. So the Dow's down 30 at 15,606. The S&P is down $1.92 at 1720. The comp index is up 4 at 37.93 because Apple's got this news coming out today. Apple's up 3 at 475, holding quite nicely. Gold is down very sharply at 31.70. You remember I spoke about that single leg A-up syndrome. It's a technique that I've developed over the years. I don't ever go into these things looking for techniques. They have to jump out and knock me on the head and say, do you remember you've seen this 10, 15, 20, 30, whatever it is, number of times? Don't you think it's time that you started using it as a technique? Come on. So now look at this. GCZ13. That's that single leg up syndrome that I talk about. Why do I call it a syndrome? Because it has a certain characteristic. If you don't recognize it, you can very easily get trapped into buying at the high of the single leg A up. And then what happens is, if it doesn't hold a certain support level, I usually say 40% says be careful, 50% says watch out, 60% says whoops, you're probably going to go to the low of that bar. And right now the gold is given back. Look how much it's given back from the Fed speak spiral, 56 or 52 points up back on Wednesday, given back a huge chunk of that. So that's something to keep in mind. You've got so gold is down sharply at down 31. Silver's down $1.26 at 22. Platinum's down 26 at 14.37. High grade copper now giving back. Man, I tell you, this copper, it's just the funniest thing. That's a single leg syndrome, but it's holding well. But it is something I am watching so closely because it's telling me about the future if certain things happen. And I'm going to be watching it and noting exactly whether or not 3.27 is going to be taken out or whether it's going to be 3.36 or 3.37. Big difference on either side. Let's go to the crude oil is down 73 at 105.66. I'll just do this quickly. CL, I'm not going to go to any contract, going to continuous contract in a trading range. Bonds are up 6.30 seconds at 131.13, but maybe we get a chance to look closely at them later on. And the dollar, man, that dollar, the monthly chart has taken out the support, but I always wait, whatever candle you're looking at, if it's a 3-minute chart, wait for the 4th minute because you want to let that bar finish. If it's a weekly, wait for Friday at 4 o'clock. You've got to let that bar finish. Right now, it's sitting on the 200-period moving average. If it's a monthly chart, wait for the month to finish. It is under, but it could still close above the inside track support line. So with that said, let's see. What I wanted to do is, let's see, I got all that done. Let's go to Garrow in Newport Beach. Hi, Garrow. How are you?
How are you, sir?
Very well, thank you.
Right. Again, we're going back to the same chart, the Visa.
Visa, which is trading at 195.83, up $1.12, and it's in leg C, possibly peak C today, and it went to a new all-time high above the previous peak F in the weekly chart, which says you might be looking at a recycle. Wow. And the monthly chart is in a G/, and with the instant restart, I just have to consider that it cannot be a G. It's probably in leg C. Now, Garrow, tell me what you did with your position.
Still, I have it. I bought it at $185, 300 shares on September the 11th. Still, I have it.
Right.
I have very, very tight stop loss on it. Here on my weekly chart, the resistance is 197.21 on a weekly chart.
What is your stop? One?
My stop is $2 is on $193.
Okay.
If it goes to 193, it will sell automatically, and I bought it for 485, and I'm happy with it. But here on a weekly chart, the resistance on this is $197.21. You think should I get out now? Or should I wait, be greedy and wait for 197? It's a little bit difficult because somehow this is the third green candle that I can see in the weekly chart, which is a three white soldier. Usually after three white soldier, there comes the black crow. Should I wait for the fourth green candle, or should I get out by end of the day, or probably in an hour or so?
Okay, Gary, this is what I'm looking at. You remember when we spoke, I think you said your target initially was about 194.20 or something like that, wasn't it?
Yes, sir. Yes, sir. Correct.
Okay. And what I said to you is the way I'm looking at Visa, I don't want to change your thinking at all. I want you to stick with your methodology, but within that methodology, what I wanted you to also consider, because I'm looking at very powerful strength in Visa, that there's a chance that it would go higher, and therefore you might want to use and just start thinking about, even if it was a paper trade or keeping something, maybe just 10 shares, just a little bit, to see whether or not you could start to expand a really good technique that you have with parcel A and parcel B, and see if slowly parcel B, which is a new concept, which would not lose you money, it would just probably not make you as much. No, it might give you a little added incentive to see if you could increase your gains by a small percentage. That's the way I thought about it. So you did not take your money off when it hit the target, because it was very, very quick. It actually closed yesterday about at your target. It closed at 194.71. Now you've got a bonus today. So I'm going to talk about this in terms of expectations, surprises, how you deal with them, and how you give yourself a treat, a T-R-E-A-T, a present for what you've done and what might be next. So hold on, and we'll be right back, and I'll...
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil CHapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back with Gary from Newport Beach, and we're looking at Visa. Gary had a fabulous trade. He put on at about 185. His target was 194. I recommended when he spoke to me last that I was seeing a lot of strength, and that he might just consider, even if it's a paper trade or just a small position, to take the when it hits the target, to take whatever you want to take off, maybe just to keep a tiny little bit, because there's a chance that this could still go to leg D. There really should be a leg D, as well as the fact that I've done a little more work on it, and I'm looking at the weekly chart. And I'm going to discuss this now because it pertains to what I wanted to do in my session today. I wanted to go to what I call the naked charts, and I'm going to show that here for a moment. And now I'm going to go back to Garo's question. So, Garo, this is what I'm going to suggest. At this point, you are up about $1.25 more than you had anticipated. So as I said, you've got a fabulous system. I've listened to you for years, and you've called in, and I know that you have specific goals. Very often they are hit. You're out. You couldn't care whether the stock continued and doubled after that. Every time you want to get your X amount of money that you've planned for. I don't really want to change that, but what I want to do is to add just a little something that says, you know what, there are times where the strength is such that you might want to do exactly what you have set out to participate in, that particular gain. If it hits that gain but still shows strength, then to keep one part of that position and put a much tighter stop on that position, And if it reaches a particular target, in my particular instance, I'm looking at 198 round number high yesterday. I am big into round numbers, have been since before the crash of 1987. And that's the reason why when I saw all those round numbers on October the 19th, my next day, on my hotline, I said to my clients, this is going to be a buy signal that makes all-time highs in the Dow within 18 months. I look at round numbers and I'm saying I'm just seeing too many of them now, and they are saying that some big fund managers are trying to get out of certain stocks at a certain price, and they just say, you know what, I'm not going to fuss 198.3, 190, I'm out. 198, you get that, I'm out. I think that's what I'm reading. But the technicals are still strong. So here's my suggestion. I would not want to change your plan. If your plan was to get out at 194.20 or 30 or 40, whatever it is, I would suggest that you, when we're done, consider taking your profit in at least half of what you've got. Or I would actually recommend being strict to your discipline and now add this new little bit of advice as just a little kicker that might or might not work. And you keep, I don't even want to tell you what kind of proportion, but a certain small amount you keep. Why? Because everything about this says that Visa should go to 198.01 or higher to start leg D. Now when I get to my weekly chart, there's something else that's happening. There's a pattern that I call the double top or the falling axe. It looks like, or the drop bucket pattern. Why? Because it looks like a backhoe that lifts. It's got this long arm. It lifts. It's got the bucket. It lifts up all the gravel, and then it lifts it, and it gets to a certain height, and it just drops it. And that's what happens very often in this particular pattern. If I can just go to my CD for a moment, I'll go to slide 23. Let me put 23 down. Later, I want to go to the pattern that I call the double top drop bucket pattern on chapter 22, and I'll show you the pattern that repeats so often that it's really worth keeping it in mind rather than dismissing it. This pattern that I'm showing right now, and you will see that what happens is that the technicals start to fail as the price comes back to a new high. Well, in this particular instance, the technicals are kind of weak. They are turning around, and I don't know yet whether this is the start of a brand new leg A, which would be amazing. It would imply no way for at least 2.5 months would 170.99 be broken, the low that started this move up. I just don't see it. My eye says that Visa in the next 2 months will pull back and come. I could be wrong because the monthly chart is still very strong. And I've got an alternate wave count of G/C. I suspect that it's C in the monthly chart. It is probably G in the weekly chart, and we will get a pullback. So this is what I'm going to recommend. Take off, stick to your plan. I don't want to tell you to take off the moment you put the phone down, but think of taking something off. Try to keep a little bit, and if it goes above 198.00, that's where you raise your stop to a 50-cent stop and just say, take me out whenever you want. I hope that helps you.
Yes, sir. I appreciate it. Thank you, Mr. Basil. While you were talking, I sold it already.
Okay.
195.50.
Fantastic.
Thank you,
congratulations.
Sir. Thank you.
Now you'll paper trade the rest.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. I'm getting lectured by my engineer for overlapping those ads. Well, that's the way it is. I'm sorry. I was asked about INVN, but I'm also going to go straight to, whoops, I see I moved my mouse a little too much there. I'm going to Mike in Ormond Beach. Hi, Mike. How are you?
Good, Basil. I work so much, it's so hard to follow you. I try to follow in the archives, but I was wondering if you could confirm which peaks and legs we are in the daily, weekly, and the monthly at this time in the Dow.
Absolutely. That's very easy. We're at peak B in the daily.
Okay.
And based on the Chapman wave methodology, that says, especially with the stochastic at 94% and the MACD still very strong, that we should go higher, that we should go, in fact, above 15,709.58 to start leg C. That's the daily. The weekly chart is the pattern that I'm watching very closely. Why? Because there's a pattern that I look at. When you look at W's at the bottom, W formations, right, very often they can project to the upside when a certain trend line is broken. What I've noticed for years is if you treat this as a double cup formation, let me just draw this in here, like one cup there, and then a higher low, and so far a higher high, the trend line that becomes really important isn't necessarily one that just joins the previous two tops, which would make the, let me just get that right there, that would make the next high of consequence 15,790s.
Mm-hmm.
But you really want to go for the longest trend line that you can. And if I do that, the trend line that started way back, whoa, way back, actually started way back, I think it was about February of 2000, this is the weekly chart, 2010, about the week of February the 5th, that trend line, which has just been beautiful resistance and support all the way, continues. It goes through some of the candles right at the top of the 24th of May at 15,542, but it stops dead right at 15,658, exactly the high of the 2nd of August, and that particular trend line comes in around about 15,896. So that's one way of looking at it. Another way of looking at it is in my daily chart that no, I don't want to go to that one because that's the one that we've already surpassed by a tad. Let me go back to this. What I wanted to also look at is that there's a different channel, and I'll draw it in now. If I can just do this right here. There you go. And that says there's a trend line, and that would be light green. Oh, it's getting too messy. I really don't like it. I'm going to have to take some things off in a moment. And I'm going to put this one up, and I'll give you the parameters that I'd be looking for. Right. So that's a trend line. There you go. So that says there's a possibility that the Dow could go to the 16,209 level. I just don't know. That's a weekly chart. That particular trend line is actually 16,200 to 16,800. I like to go step by step. And all I can say is I'm going to be looking very closely at my daily chart. And one of the reasons is that the trend line I love to use, and I've used it for a very long time now, is the one in the monthly chart that goes to the highs. And this is really your question. Your question is, where are we? And is peak B in the daily expecting C and D to come next week?
Right.
The weekly chart has, let me just double check here. It has, I'm calling it leg E for now. That just fits very nicely into everything that I'm looking at. But I've got some alternating counts in the different, and the other weekly charts. So it's the monthly, and the monthly says the inside track cell repellent zone comes in. This month it's between where we are now and a high of 16,200, and it goes slightly higher, moving up as we go. It's a trend, it's a rising trend line, so that it's slightly higher each month after that. MACD's at 87%. It's good. The relative strength is starting to turn down, and the on-balance volume is giving a slightly different way of looking at the two different indexes. I know that Steve loves to use the RSI, and he does it very successfully. I like to use the on-balance volume together with the RSI, with a lot of importance on the RSI, and that's saying at this particular point, on the 20th of September, there is still tremendous internal strength in this leg D up in the daily, in the monthly. But I've got to keep in mind that other times we've looked at these very long-term channels, they sometimes break to the upside, which the bonds did back in June of 2003, and then they come right back in, and then they try to make the trend line a resistance magnet point. This time bonds have gone to the bottom and are holding that key support. So I love to say, if you're what I call inside the Chapman wave inside track parameters are set and constantly are respected, you've got to put a lot of import into that. And so far they have been respected in back in October of 2007 at 14,198, that doji high at peak F was exactly a level that historically looking back has been very important to us. At that particular point, it was a different, I was using different techniques because there was no high that I could use. So this is a new one. And also, if you look at the proportionality of the move from 2000 to 2007, add 7 to 2007, and you get 2014. And that's telling me I suspect we're going to continue into the very early part of 2014 to rise. Within that period, we're going to get one smash to the downside. That's the way I'm looking at it. When it comes, I'm not yet sure, but the next top in the daily will tell me, at least on a shorter term basis, to be careful. So does that give you what you were looking for?
Yeah, I'm just trying to get an overall picture, and I thought I heard your archive yesterday saying that you do think that we should get some kind of a pullback in October.
Yes, my eye and my technicals are saying, with what I'm looking at in very important, what I would call key sectors, and what's happened today in some of the cyclicals is telling me, and if you look at Google, actually, you know what I'm going to do? I don't know if you're going to be able to listen to the rest of the archive, but for the rest of the show, I'm going to be going through what I call the naked charts. I'm going to go to this particular chart right here, and if you're looking at Tiger TV, and I'm going to show the wave count on a daily basis on many, many charts. People in the day can even throw out letters, and we'll do it as symbols, and I'll show you how many charts are either at D, or some of the best ones are like the Dow Diamonds are in B with the Dow, saying that there's just enough room to move to the upside, and over the next 3 to 5 sessions, we will see whether there's a failure in some of the best sectors to date, and whether this rotation, we're seeing it in the retail sector, a big rotation in the weak stocks and the strong stocks as they filter through. It's like a sieve, and the sieve is looking like it's gathering all the stronger material, and all the little thin stuff is falling through the sieve. So I hope that helps you. So B, expecting some kind of a D, and then we'll see if we're getting some kind of a sell signal next week in the Dow, and that'll correspond with E or maybe even F in the S&P, and we will be looking to see what IYM and all the others. I'll do some of that just now, and the weekly charts are the ones that say, because of the rally to new highs, there's a chance that this move might not break the lows that we just saw 2 weeks ago, but it depends on how the wave count comes in going into next week. So I hope that helps you.
Okay, so daily B, and the weekly we're in leg E.
Yeah, and that allows in the daily chart for us to have a pullback. Maybe we rally one more time, so the weekly charts that are in C, alternate count C, in some of the indexes go to the D sometime in early October, and then by mid-October we start to see a sell-off. I don't know yet, but I'm just saying I'm getting to a stage where I think the upside is becoming limited,
right,
and the downside, sideways to down, is becoming, the chances are becoming stronger. I hope that helps you.
Yeah, and just to say again, you said weekly we're in leg E, possibly a B.
And in the weekly chart, I'm calling it leg E. I can't actually do anything else. I would have been able to do something else if I called one of the weekly charts a phantom peak, but there's no room for that. So right now, I'm calling it an E. There's a cup formation. The double cup formation is the one that I'm watching closely. If it succeeds, it's a powerful move to the upside. I think there are too many stocks now that are looking a little bit tired, and I'm not sure that some of the ones that have just started to try to break out are the ones that can carry us through. So I'm becoming a lot more cautious.
Okay. Well, thanks again, Basil, for all that you do. Appreciate it.
Thank you very much for calling. Bye-bye. Always appreciate it. Thank you, Mike. So let's go to the front page of here. Folks, talking about front page, go to the front page of TFNN, and what you will see is that I'm doing a live presentation. I'm a guest speaker over at MIT at the Boston Investors Group, and it's together with the Investors Business Daily Group that meets as part of that organization. And it's the 10th anniversary birthday. It's a privilege and honor to be chosen as a guest speaker. So I'll be there Wednesday night. It's right in the front page of TFN and all the details, but it's also, if you do come, there's no fee or anything. But if you want to just bring something, snacks or whatever it is, because people eat from 7 to 8, and then I give the presentation 8 o'clock until we end. Who knows what time that'll be? So, all right, now let's get to the story. Here we go. Here's the Dow Diamonds. Let me just quickly do this naked chart. You go to the low bar, you see that long candle, the wick there, and you go peak A, peak B, peak C, peak D, and then it goes to a peak E. Pulls back, A, B. That was a parallel high. So that says to me there should still be a C and a D. That's number one. Let's go. I just threw names down, letters down. Goldman Sachs. Let's do this. The prerequisite of the Chapman wave is to find the lowest, most identifiable low bar, and then merely count each successively higher peak. It sounds like it's easy to do, and most of the time it is. But every once in a while, it becomes a little bit more complicated. Let me just put the down arrow. There you are, down arrow. And then on the way down, lowercase, it goes trough A, trough B, trough C, trough D, trough E. Starts a brand new buy signal. And that's the pattern that I call the capital A. Look at that A. My engineer says, keep checking your clock. I'm checking the clock. I don't want to overlap any ads coming up, because ads are what makes TFNN continue surviving. Yeah, all our wonderful sponsors. So here we go. Peak A, B, B, C, and D. And it says that Goldman Sachs is getting a little bit toppy. Double top, double bottom, double top. These patterns can continue for a while in a trading range. What did I do? I said Bank of America, BAC. It could have been anything. Geez, this came to mind. Let's just see. BAC. Down, up arrow. A, B, C, D, E. Double top. Remember that pattern that we're talking about? The drop bucket pattern. Right there, right there. Falling. Here's the long arm of the law right there. And it pulls back and start a brand new buy mode. Starting from there, and it goes A, it fails, comes all the way back. That's at almost single leg A, fails, starts a brand new buy mode, goes A, B, C. I was asked about something, whatever it is, just now. Let's have a look at that. There it is. So Bank of America has had a peak D. It's a little bit vulnerable here because it couldn't even get above the previous high, or the high at peak E, so you've got to be somewhat careful. Let's look at INVN. Oh, yeah, got to go back here. I'll go back as far as you want. Look at this. I love big gaps from the bottom, from a major low, because sometimes they don't get visited for a long time. Sometimes it's years. I don't know if this is the case. I'm just saying. This is a daily chart. So A, B, C, D, A, B, C, D, E. Big spike. I'm going to call that a rogue wave F. And now we start again. So here we go. A, B, C. Where's the B? B, C, D, E. And then it's got another F right there. Ping. So you've got two Fs, one over there. Well, actually, that was an F. And this is the little one with the inverted V that says that besides the fact you've got a sell signal, you had some extraordinary rally to recycle, and it's failed. I'll talk about that in a moment. So the Dow is down 53, S&P is down 5. I'll be right back.
Recently, Basil CHapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil CHapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move, it's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Let's just go through this again quickly. I was asked about Agilent. Look at this. It's gone A, B, C, D, E, F, pulls back. This is the daily chart. A is a symbol. Then it goes A, B, C. Yep, that's a C, D, pulls back. But this could be, because it didn't break the previous low, this could be a recycle, and it could be E/B, F/C with this huge candle yesterday. And what does it do today? Yesterday's high was 53.47, and today it's got an inside bar. So this is worth watching, but it's been an absolute monster on the upside. So I've just gone, this is the core of the Chapman Wave methodology. Just wanted to quickly go through slide 23. Let me type in 23 here and explain to you, for those of you just new to my work. You can see the bars. They don't mean anything. I decided initially to maybe use numbers. Prechter was a big deal in Elliott Wave at the time, 1980s. I said, I can't get mixed up with that. I don't quite understand Elliott Wave. I've got my own methodology. It has nothing to do with Elliott Wave, although a lot of people tell me they use Elliott Wave and they find that the Chapman Wave methodology actually makes the Elliott Wave much clearer, and I use those capital letters. And look at what happens. You put the down arrows and the up arrows. That's the simplicity of it. Well, let's go to Dan in North Reading. Hi, Dan. How are you?
Hi, Basil. How's it going?
Very well, thank you.
Good. I'd like to get into this DXJ position for kind of a longer-term hold, and just I like how it's moving, but kind of just tying in with what you're saying about market pullback in the next month. I'm wondering if I should wait.
So, okay, let me just quickly do this. I had this all notated. Now I have to redo it. A, B, C, DE. I've got it in E with the Chapman Wave Instant Restart that I'm going to call an instant restart because it meets all the criteria. Back in the 12th of April. Folks, we're looking at TJX. TJX, talking about monsters like Agilent.
No, sorry, it's actually DXJ, the Japan.
Oh, DXJ.
David X-ray J.
All right, now I've got that here as well. Okay, the DXJ Weekly says that it's made a rectangle formation, and the weekly chart, the monthly chart is really improving a lot. This is Japan hedged equity fund. Now it's trading at 48.63, down 18 cents. Are you in it at all or not?
No position yet.
Okay, now this is going to make it really difficult for me because it's making peak C today. It looks like it, like the Dow and the others, technicals are good. It looks like it wants to make a D. If it closes above 49.54, I've got a double cup formation within a larger cup formation within a dreaded H formation that says very often this kind of chart wants to trade towards, up to, or over the previous major high, and that would take to 53.95. 5 points, very nice gain at 11%. I'm going to suggest, can you hold off a day? Let's look at it together on Monday. Are you able to call me Monday?
Yeah.
Call me Monday, because if it pulls back just gently on Monday, I'm going to make a suggestion that says to start a position, but it's only a small position. If it goes to D and all the way through next week, it doesn't break 47.81, but it says rallies, I think we might have something as a position that could become a core position, and then we'll work out how to work within that time frame. But I don't want to do it just right now. I would much prefer to do it on Monday. Even if it gaps up on Monday, I'd prefer to do it on Monday than today. But I would only treat it as a starter position with a chance that it has the 3 to 5 points gain. But the moment it takes out 47.20 or 47, this rally is over. So I don't want to jump in, and I want to explain to you what I'd be looking at. Give me time over the weekend to do a little bit more work. Hey, Dan, thanks for calling. Hope to speak to you Monday. Folks, have a great weekend. And don't forget, go to the front page of TFNN and check out, I'm talking on Wednesday evening live here at Cambridge, Mass. To have a great weekend. Stay tuned for Nick Owen Page.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.